The CNBC app. Global market news in one place. Customizable sections and personalized alerts. Stocks tracking, interactive charts and market insights all in your hands. Stay connected. Stay informed. Download the CNBC app today.
Very warm welcome to Squawk Box. We are so busy, but look, you've got the magnificent Juliana Tattlebaum and myself, the less magnificent Steve Sedgwick, and these are your headlines. Elon Musk has called for the US government, wait for it, to delete entire agencies and save $1 trillion under his Department of Government Efficiency overhaul.
It's like a corporate turnaround, but at a much larger scale. There'll be like some disruption, but at the end of the day, we'll have people move from, like I said, from low to negative productivity roles to, in the government sector, to higher productivity roles in the private sector.
And how about this? A hotter than expected US inflation print, and no, it wasn't just about eggs, pushes the 10-year Treasury yield past 4.6% and triggers a bit of a rethink on the Fed's rate-cutting path. Billionaire investor Ray Dalio warns of clouds on the horizon.
We're getting into a period now where asset prices are becoming pretty high. When you have these high prices relatively high, and then you have a rise in interest rates, that can cause trouble.
President Trump begins negotiations on ending the war in Ukraine, signaling support for a ceasefire after a lengthy conversation with Russian President Vladimir Putin.
I think we're on the way to getting peace. I think President Putin wants peace, and President Zelensky wants peace, and I want peace. I just want to see people stop getting killed.
And German lender Commerzbank delivers record profit with revenues jumping 6% to 11 billion euros. We'll be speaking with the CEO, Bettina Orlopp, first on CNBC at 6:40 GMT.
And Siemens posts revenue growth ahead of expectations in the first quarter, despite a decline in orders at the company's mobility unit. CEO Roland Busch sounds a warning on the health of the German economy.
We have to change something. We have to get this German economy back into a growth momentum. We cannot live with a contraction or very, very low growth.
Well, there's a mixture of excitement from me on the desk and trepidation from Juliana, because it's the first time we've worked together for years.
Steve, trepidation, that's not true.
Who knows what I'm going to say is your worry. Anyway, we've got 3 hours together. Oh, no, we haven't, because you're going off to another key interview. But we've got a few hours together to pontificate and think about the future.
I look forward to it.
And I'm loving having you on the show. I genuinely am. It's a great burst of energy. Talking of a burst of energy, Elon Musk says he's declaring, well, we knew this, but wait till you listen to what he has to say. He's declaring a war on bureaucracy and aiming to reduce US government spending by $1 trillion. Let's be brutally honest, all kinds of numbers have been chucked out, but $1 trillion's a big figure. Speaking virtually at the World Government Summit in Dubai, because he is now in government, obviously, and sporting a T-shirt emblazoned with the words White House Tech Support. Mr. Musk said the public backs the measures laid out by him and the Trump administration.
Reducing the size of government and making the government much more accountable to the people, I think, is going to lead to a better outcome for the people. What I've said is that we really have here rule of the bureaucracy as opposed to rule of the people, democracy. So we want to restore rule of the people. And so what that means is reducing the size of the federal government, basically reducing regulation. There's a tremendous amount of over-regulation that's happened over time, and this is an inevitable consequence of a long period of prosperity. Is that you're going to get more and more rules and regulations, more laws accumulate over time, and the normal forcing function for getting rid of rules and regulations is war. So it needs to be some kind of existential war, where you have to do a reset in order to avoid being defeated in a war.
It's exciting, isn't it? Dan joins us with more. Dan, what a speech.
Really, what a speech, Steve. Fireworks in Dubai. So interesting to hear Elon Musk weighing in on all of these big issues, and in particular, the issue of government spending. Whether or not he's actually going to be able to scalpel $1 trillion out of US federal agencies remains to be seen. But of course, one of the other things he also alluded to in this speech was the battle brewing between Elon Musk and the OpenAI CEO Sam Altman. This week, we heard Altman suggesting that the company has not received any official offer from Elon Musk, despite Musk insisting that he's lobbying almost $100 billion to take control of OpenAI. What we also heard was Altman saying the company's current structure is essentially designed to ensure that no one person takes control. Well, very interesting to hear Elon Musk really throwing some gas on the already rising flames on that story in Dubai, saying that essentially Altman is trying now to delete the non-profit. Listen.
AI has gotten this far while having at least a sort of dual profit non-profit role. What they're trying to do now is completely delete the non-profit, and that seems really going too far. I provided all of the funding for OpenAI in the beginning for the first almost $50 million for nothing as a nonprofit, and it was meant to be open source. And so, I think this is analogous to like if you pay if you fund a nonprofit to preserve the Amazon rainforest, but instead they turn into a lumber company and chop down the trees and sell them for wood. You'd be like, wait a second, that's the exact opposite of what I donated the money for. So OpenAI is meant to be open source, nonprofit, and now it is closed. They changed the name to Closed for Maximum Profit AI. Closed for voracious profit. I mean, they're like, whoa, are they after money next level?
Elon Musk speaking in Dubai there. And of course, the battle over OpenAI's future really stems from an historical conflict that we have seen playing out between Altman and Elon Musk. They have very differing views on OpenAI's future, just considering how powerful and how impactful this technology is and will continue to be. Of course, Musk, as you heard there, co-founded OpenAI back in 2015, and he's now suing the company over antitrust violations and what he says is this shift to a for-profit model, Musk insisting that the company should remain a non-profit, given the power of that technology. Also important to point out here, though, and we've done excellent reporting on this through the course of the week with our Arjun Karpal live on the ground in Paris. Elon Musk also said in Dubai just a short time ago that his AI chatbot and a ChatGPT challenger, Grok 3, is in the final stages now and is going to be released in about a week or two. So Musk is a competitor here. And we also heard Sam Altman saying this week that this bid, this near $100 billion bid to take over OpenAI, according to Altman, is Musk's attempt at slowing down a competitor. Just to add context to this ongoing debate that we see over OpenAI's future and the battle between Altman and Musk.
Yeah, you're absolutely right. And I know on the Instagram account of Arjun Karpal as well, if our viewers want to look at that, there's a great background piece and his doorstep with Sam Altman. So it's brilliant that he's been right at the centre of the story. But your coverage is also magnificent, Daniel. So thank you very much indeed for that. President Trump has pledged to sign off on reciprocal trade tariffs on any country that charges levies on US exports. Let me get this right. I'll take one step back before we go on there. He can put tariffs on other countries, but other countries can't put tariffs back on US. That's kind of, I think, what he's saying. He's going to put reciprocal trade tariffs on any countries that levies on US exports. It seems a bit asymmetrical, this trade stuff. Maybe I'm wrong. Anyway, with an announcement potentially coming as soon as today, the US leader has already put duties on imports of all steel and aluminium, and for Juliana, that's aluminum, imports into the US.
I appreciate that.
Thank you there. House Speaker it starts. House Speaker Mike Johnson said he believes the White House will consider exemptions from certain industries, which could include autos and pharmaceuticals. I'm just going to get through some gumph in my prompt. Meanwhile, the Indian Prime Minister Narendra Modi will meet with President Trump today in Washington, with New Delhi's mounting trade deficit set to be a key feature of talks. according to CNBC sources. Mr. Modi is reportedly set to offer a raft of trade concessions in a bid to stave off a trade war. The Indian leader will also meet with Elon Musk, with AI on the agenda, in a trip that comes off the back of his visit to France at the AI Action Summit. Meanwhile, we've got a CEO waiting in the wings.
We do. Let's get to it. DSM Firmenich has posted a full-year revenue of 12.8 billion euros while unveiling a share buyback program of 1 billion euros. Very happy to say Dimitri de Vries joins us now, CEO of DSM Firmenich. Dimitri, great to have you with us this morning. A lot of news flow around your company in the last week or so, starting with the news about selling your Feed Enzymes Alliance JV, your piece of it, to your partner Novo Nordisk. We'll get to that in a moment. First, on your results, looks like pretty strong momentum to end the year. Tell us more.
I think we had a very good 2024. Remember, we're merging the company. This is the first year that we have a full annual report launch here. So we're very happy that we could present good results with good momentum. Remember, we are building a company, bringing two engines together, a bigger engine, a smarter engine, a tuned engine. Very happy to see that it generated the results we were looking for in 2024.
And in terms of that integration, how would you say it's going?
I think at the end of the day, what we decided is that we would land integration very quickly in the businesses. So we didn't want to have two virtual worlds together. We just wanted to create one world. And I think you've seen that. I think the end of 23, we have said that businesses will take the lead in the integration. And you've seen the result in 24. We took that responsibility. And the engine is working. It is smarter, it's faster, and very happy to see that being reflected in our performance with a 6% growth for 2024.
And you've been doing a lot of portfolio pruning as part of this transformation at DSM Firmenich now, including this announcement earlier this week around selling your stake in the JV with Novo Nordisk to Novo Nordisk. Speaking to the analyst community, this has come as a positive surprise in terms of the timing and the valuation that you got for your piece of the stake. Can you shed a little bit of light on how this decision came together?
Yeah, I mean, when we started the company, we wanted to be a company in nutrition, health, and beauty. And we took the opportunity to look at the portfolio. We were a 13 billion euro company. So you look at your portfolio for the future. We have geared our portfolio around three trends: preventative healthcare for the future, healthy food, as well as well-being. So therefore, we announced last year in February that animal nutrition will be better served by another owner. Part of that animal nutrition business is the Enzyme Alliance, which is a 50-50 alliance, which obviously is a fantastic alliance with Novo Nordisk. But by simplifying now, by selling our stake, we have also announced on Tuesday that we will start a commercial transaction process on animal nutrition and health. I've always said that the animal nutrition business is a fantastic business. It is slightly more volatile. That's the reason why it doesn't fit the DSM Firmenich scope. But I think it's a reflection of the price we've got for the Enzyme Alliance, that this is a fantastic business. And we started the commercial transaction for the rest of animal nutrition and health just beginning next week.
Dimitri, I for one will be disappointed not speaking to you about burping cows in the future, but we'll have to park that minor disappointment. Talk to me about the shares, Dimitri, and by the way, lovely to see you, my friend. Since their peak back in September, it's been a tough road as well. What are the investors saying about what they need to see from you from the integration and the strategy going forward? Because at the moment, whilst you say, a great engine of growth, I think you said there as well, there seems to be a few doubts in terms of the share price performance.
Yeah, I mean, Steve, I'm happy that I don't need to disappoint you, because Bovaer remains part of the dairy value chain and therefore part of the taste, texture and health unit. So we still continue to talk about it. Very happy to do that next time. A little bit on share price. I think share price is a reflection of what we are building. I think we are building a company step by step. You will see in our presentation that we delivered on all our objectives to a certain extent. Really building the company, really tuning the portfolio, really delivering the growth. So I think it's with A&H, Animal Nutrition and Health, going to be divested into 2025. You will see a clear path forward. And then I also think that the true value will be reflected in the share price.
Dimitri, there's better things for you to spend your money on than buybacks. I'm sure there's so many opportunities. Why are you having this 500 million euro buyback increasing to €1 billion as well? Much better things to spend your money on growing the business, aren't there?
I'm the first one who should agree with you, but there's also some credibility. And I think if you make promises to run the company with a net debt of EBITDA ratio between 1.5 and 2.5, and getting the 1.5 in for the Enzyme Alliance, I think we've always said that first we spent the money on growing our business, then dividend is an important second, then third we say we'll do M&A. But if we have a very strong balance sheet, we're very confident on the cash flow generation. Remember, we delivered over 1.5 billion of cash in 2024. I think you also need to be fair to our shareholders and said let's review that, and therefore the share buyback announced.
Really lovely to see you, my friend, and thank you so much indeed for joining us on what is a stunning busy day for you. Dimitri de Vries, who is the CEO of DSM Firmenich. Thank you, sir, as well. Burping cows, done a lot of work on that one?
I did actually. Back in my
it's kind of almost your old beat, isn't it?
I know. That was you set me up nicely for that.
Cattle manure and belching accounts for more than 30% of farming-related methane. I mean, unbelievably large amount. And people thought I was joking around. It is such an important thing to try and take the methane out of the atmosphere, and farming contributes such a large amount, and cows a large amount of that.
It was a huge part of the investment case for DSM back when I was covering it. I mean, now like 8 years ago. Yeah, it was a huge part that this was going to be a huge part of their growth story moving forward. They've obviously now merged with Firmenich, so it's moved on a bit.
You do your job. You look at down balance sheets, and you're looking at page 36, Appendix F of the Investor Relations Capital Markets Day. But actually, when it comes down to belching cows, life can be quite simple sometimes.
Belching cows also, I think that's the more polite description of what it actually is.
Well, I think it's that end is what I learned. I think it's that end more than the other end.
More than the other end. Okay, maybe we move on. I think there's some Siemens results to get to.
Our viewers know what we're talking about. I had the pleasure of getting up very early this morning. Started with a 2, because I had an opportunity to speak to Roland Bush before the show, and we just broke you a little bit of that interview a little bit earlier on as well. But I think the numbers look pretty solid in some ways. There's a lot of challenges out there as well. In terms of the numbers, there you can see a 52% increase in net income in the first quarter to 3.87 billion euros. The shares have had a great run up, so I'll be very interested to see what they do on the back of this today. So 2025 first quarter revenue, again, bit of a beat there at 18.35 as well. Roland was saying to me he had a very promising start to the year. There are issues there as well. They've had issues looking backwards in mobility and digital industries also suffering. Automation, which I thought was just going to be such a bonus area for so many years, it's suffering as well, and it's suffering because of perhaps China slowdown and Europe slowdown definitely as well. But there was some lot in there as well. Looking forward, a few concerns about the market going forward. There's been manufacturing overcapacity, it says in their outlook statement as well. A weak consumer demand, but by and large, they do expect moderate macroeconomic growth in full year 2025, continuing political uncertainty. We'll bring you that first on CNBC Conversations with the Siemens CEO, Roland Bush, at the top of the hour. And you're going to go off and speak to Nestle soon. I love this company. Well, it's so interesting.
Unfortunately, I'm not going to be going off to speak to Nestle. I'm staying here in London.
Oh, no, you're going to Unilever.
I'm looking at Nestle now.
So you're not off to Switzerland?
I'm not off to Switzerland. Thankfully for you, I'll be around throughout the morning. But now we are getting Nestle results. We got Unilever as well today. These Nestle results are really interesting. The two things that investors are really watching today into these results, volume growth and margin pressure. On the volume side, it looks like things have come in on the positive side of expectations. Organic sales growth of 2.2% with real internal growth, so volume growth of 0.8% and pricing of 1.5%. So that's positive in the sense that they were able to actually grow volumes. That was a real question for investors. In terms of margins, underlying trading operating profit margin came in at 17.2%, down 10 basis points on a reported basis and flat in constant currency, with improved gross profit margin and a 40 basis point increase in marketing investment. So margin pressure, and this was the other piece of the story here, that we're seeing a real acceleration in cocoa and coffee prices, two key inputs for Nestle, and that's clearly having an impact on margins. But volumes have grown, so that's positive.
You seen the size of a Kit Kat now?
They've shrunk.
Volume's grown, shrinkflation picks up. You can ask that one for me, for maybe off camera as well. But shrinkflation, all of us out there, yeah? You know, your favourite chocolate bar in the 70s was like this. Now it's...
Well, maybe that's where the volume growth is coming from.
Maybe
if they're
that's
smaller,
why
you got to buy more
fat
of
as
them.
I used to be. It's true. Commerzbank to cut 3,900 jobs, mainly in Germany. They're under a lot of pressure. Bettina Orlopp here, and that's fascinating. I'll tell you why that's fascinating in a moment. Cutting 3,900 jobs, unveiling more ambitious financial targets as part of a strategy revamp. Why have they got a strategy revamp? Why are the shares up 81% over the last year? You know this, guys. A little bit of self-help, a lot of pressure externally. Andrea Orcel is looming like a spectre over the team over at Commerzbank as well. So I have a question for you, ladies and gentlemen. Are the shares up because of self-help or because of what Mr. Orcel has done to put pressure on the board? The answer, of course, is a bit of both as well. But Bettina Orlopp, the CEO, is going to be speaking to this channel. I can't wait. Annetta will speak to her in Frankfurt. That interview coming up 6:40 GMT. Fabulous. Juliana.
Coming up on the show, Donald Trump promises negotiations on the war in Ukraine. We'll bring you the latest on his diplomacy efforts after this break. Plus, it's a mixed bag for French corporate earnings. We'll be joined by Charlotte to break it all down for us later this hour. And Siemens reporting what it calls a promising first quarter. We'll discuss the figures with CEO Roland Busch and bring you that first on interview at 6:30 GMT.
Got some news for you, ladies and gentlemen. This is breaking news. It ain't just about the eggs, okay? You know what I'm talking about stateside, this massive increase in the price of eggs, but it wasn't necessarily to blame for these inflation data. I'll talk to you about that a little bit later on. US annual inflation increased to 3% in January, with the monthly figure up 0.5%. That is the fastest pace in nearly 18 months. The hotter than expected prints prompted a rethink over how many rate cuts can be expected this year. How many times do you guys need a rethink? Just asking for a friend. Futures markets now expected only one cut this year, not two, and most likely not until September at the earliest. Shelter costs remain a key driver of inflation. Egg prices, here we go, posted their largest monthly increase since June 2015 as an avian bird flu continues to plague chicken stocks. But I'm telling you, the component that was eggs is minimal compared with the... In fact, do you want me to do a bit of work on it? I've said it a couple of times. The 39.6% year-over-year increase in egg prices added, wait for it, according to high-frequency economics, 0.05% to the year-over-year increases and headline inflation core. Eggs gets the headline, but it ain't the key factor.
There actually was a pretty big uptick in used car and truck prices, which is key.
Used car and truck prices.
Transportation, medical costs, also pretty big contributors. So it wasn't all about the eggs. It seems like this is consistent with some of the other indication we have on inflation, but I think the bottom line here is that inflation overall is running hotter than expected.
Yeah, absolutely. The yield, on the back of what Juliana was saying there, it rose. Went up to 4.6%. Investors rotating out of some government bonds. And I can tell you also, the dollar's just fallen despite that print. There's a lot to digest there as well. Mr. Dalio, the Bridgewater founder, Ray Dalio, warning, this is another warning, this is really interesting, warning asset prices are beginning to look increasingly inflated. Speaking to Dan, great interview, really was, at the World Governments Summit in Dubai, Dalio warned high prices, coupled with the threat of rising rates, could spell trouble.
We're getting into a period now where asset prices are becoming pretty high. This can look quite like 1998 or 1999 when asset prices rise. Back then we had great new technologies, the internet, the .com and so on, and that went on to be great. But pricing matters. And so when you have these high prices relatively high, and then you have a rise in interest rates, that can cause trouble. There's a lot of risk in the debt asset. People think of default risk, but there's the money and the devaluation risk, because there won't be a default. The central bank will come in and will print the money and buy it rather than to let that default happen. And that's where there's the depreciation of money, the value of money. And so you have to think in real returns, not just nominal returns, and be aware of those risks.
Let's get back to the market reaction to that hotter than expected CPI print yesterday. As you can see here, we saw some of the shine come off of U.S. markets. Equities pulling back yesterday. The Dow Jones losing about 50 basis points. The S&P closing about 1/3% lower. And then tech-heavy NASDAQ closing essentially flat on the day. We did see a spike in bond yield, as Steve just flagged. Here's a look at Treasury and where we stand right now. We are lower across the curve, but we did see a move higher in yields yesterday. Right now, the 10-year trading around 4.6%, the 2-year 4.34% or so. We saw a push up in mortgage rates on the back of this jump in the 10-year yesterday in response to that report as investors, market participants adjusted their expectations for the Fed. If the inflation picture is filled with more pressure than expected, then this certainly makes it harder for the Federal Reserve to cut rates, and that we have seen an adjustment in expectations for further rate cuts from the Fed. The dollar, very interesting this morning, and we will hopefully unpack this a little bit more on the show. We have seen the dollar index this morning slide to about 107.49, the lowest level since February 5th, despite the fact that investors are dialing back those expectations of further rate cuts from the Fed. So what is actually contributing to that downward pressure on the dollar? Right now, we've got euro dollar trading around 104.36. Sterling is trading up by about 0.4% versus the greenback 124.96. Dollar yen trading slightly weaker as well. On to commodities. Here's a picture of oil and oil this morning. You've got WTI and Brent both down about 0.8% apiece to $70.80 a barrel and $74.50 respectively. Gold trading higher this morning by about 0.4% to about $29.16. Steve?
Thank you very much indeed for that. And I'll see you a little bit later on because you're going off to do a key interview, not in Switzerland, but down the road in Blackfriars. Thank you for that. US President Donald Trump said he has agreed with the Russian President Vladimir Putin to immediately start negotiations on ending the war in Ukraine, following a call with the Russian president. Trump said that the pair would hold further meetings, including in person. Mr. Trump also held a call with the Ukrainian President Volodymyr Zelensky, who said they are charting the next steps for a lasting, reliable peace. Speaking in the Oval Office, Trump told reporters that all three leaders want to see peace.
We had a great call, and it lasted for a long time, over an hour this morning. I also had with President Zelensky a very good call after that. And I think we're on the way to getting peace. I think President Putin wants peace, and President Zelensky wants peace, and I want peace. I just want to see people stop getting killed.
Ukraine's European allies were quick to stress the importance of their role in the peace process. A group of foreign ministers issued a statement, having met in Paris, saying they are looking forward to working with the US on the path forward. But Europe and Ukraine must be part of any negotiations. Annalena Baerbock is, of course, the German foreign minister, and she has said the following: peace in Ukraine needs to protect its sovereignty, or at least what's left of its sovereignty. Let's be brutally honest, ladies and gentlemen, as well. There are large tranches of the country which it's probably not going to get back, including Crimea as well. Europe needs to talk with the US government on peace and security in Europe. This is on Deutschlandfunk. She is speaking. Negotiations regarding Ukraine need to involve Ukraine and Europe. There is obviously a fear in Europe and indeed in Kyiv that these negotiations will be direct Moscow, Washington, without including the other parties. That is the fear. Let's be brutally honest. Speaking to CNBC ahead of Trump's announcement, the Polish president, Andrzej Duda, expressed hope in the administration's policies.
Not a question of victory over Russia. Certainly not some sort of victory parade in the Red Square, as some may imagine, because it's not realistic. It's about showing them that a violation of international law did not pay off, and that it was not worth it. This is something that I fight for, and I really hope that the policies of the most immediate future, most notably policies by President Trump and the new American administration, will make this happen.
Thank you for listening to Squawk Box Europe Express.
For more market-moving news, you can head to cnbc.com.
Or join us again on the show with Steve Sedgwick, Karen Cho, and myself, Arabile Gumete, weekdays on CNBC.